All right, want to get smart on clean science and technology. Specifically, their Q2 FY25 results.
You came to the right place.
We've got presentations, transcripts, even some YouTube explainer videos, all ready to break down.
Oh yeah, we're going deep on this one. Everything from global market share to new products they're launching.
We're talking sustainable chemistry, import substitution, and a company that's been growing revenue like crazy.
Like 17% year after year, crazy.
I'm ready to dive in.
Let's go.
First things first, the industry itself. Fine and specialty chemicals.
Not exactly something everyone talks about at dinner, right?
But these are the ingredients in so many products we use daily. Plastics, pharmaceuticals, even cosmetics.
And the industry. Booming. Globally.
What's driving that?
Well, think about it. Population growth, more and more people living in cities, technology constantly advancing.
All those things need these specialized high-value chemicals.
Exactly. And that's where clean science and technology come in. They're experts in this niche sector, and they're positioned really well for what's coming next.
So where do they fit in the picture?
They've carved out this unique spot, developing and selling their own catalytic technologies.
Proprietary stuff, huh?
Yep. And not only are these technologies efficient, but they're sustainable too, which is a huge deal these days.
Everyone's looking for those environmentally friendly solutions.
Right. And that approach has paid off big time. They're seeing a 17% compound annual growth rate in revenue.
Wait, 17% every year? That's incredible. No wonder everyone's paying attention to them.
Yeah.
But let's get into the specifics. What are these revenue streams? What categories of chemicals are driving all this growth?
They've got a nice, diverse portfolio, 3 main categories: performance chemicals, pharma and agro-intermediates, and then FMCG chemicals.
All right, break those down for us.
Performance chemicals are like the heavy lifters used in tons of industries, from plastics to food preservation. Like, for example, they make this product called MEHQ. It goes into acrylics to keep them stable.
Ah, so like those acrylic countertops and furniture that are supposed to stay nice and vibrant.
That's the one. MEHQ helps keep them durable.
So even if we don't know the chemical's name, we've definitely seen what it does. What about the other categories?
So pharma and agro-intermediates, those are the building blocks for things like medicines and pesticides.
Essential stuff.
For sure. For instance, they've got guaiacol, which is a main ingredient in cough syrups. And then there's DCC, that plays a huge role in how they make pesticides.
Okay, got it. And the last one, FMCG.
FMCG is all about fast-moving consumer goods. Think everyday products, cosmetics, fragrances, things like that. They make 4-MAP. It's used as a fragrance in perfumes and air fresheners.
It's wild how all these chemicals we don't even know about are in so many parts of our lives. Okay, so they have this diverse portfolio, this killer growth rate. What's the secret sauce? What's driving their success?
Well, innovation is a big part of it. They're always pushing boundaries, always launching new products. Like recently, they got into the market for HALS, hindered amine light stabilizers.
HALS. I don't think I've heard of those.
It's pretty specialized. They protect things like plastics and coatings from degrading because of light and heat.
Oh, so keeping things from getting all faded and brittle in the sun.
Exactly. And their expertise in those catalytic technologies we talked about, that gives them a real edge in that market.
It's a newer market, right? Seems risky to jump into something new like that. What makes them think they can make it work?
Well, they've got another big focus, and that's import substitution in India. They're developing products that can actually compete with what's being imported, especially from China.
So like a buy local kind of thing, but for industrial chemicals.
Kind of, but they're not just appealing to patriotism. They're making high-quality products at prices that can compete.
That's a winning strategy for sure, especially as India's economy keeps growing. Good for them, good for the country. But they're not limiting themselves to just India, are they?
Nope, they're actively expanding their export game, selling to China, Europe, the Americas. That global reach lets them spread the risk.
Smart move. If one market dips, they've got others to keep things stable. And they're putting money behind that growth, right? Investing in development and expanding their capacity.
Absolutely. They've already got 4 state-of-the-art manufacturing plants in India, plus their subsidiary, Clean Pheno Chem Limited, and they're investing in even more new performance chemical facilities, a water treatment plant.
building a whole chemical empire. Okay, let's shift gears for a minute and talk about their Q2 FY25 financials. Anything in particular stand out to you?
Well, first off, the revenue growth, it's healthy. They hit INR 228.1 core in revenue, which is a 5% bump from the last quarter. Even more impressive, it's a 26% jump year over year, and it's all driven by volume growth.
Meaning they're selling more product, period. That's a good sign.
Definitely. Strong demand there.
Now let's talk profit. They're debt-free, which sounds fantastic. But does that mean they're limited in how fast they can expand?
Their EBITDA margin stayed strong at 42%. For every 100 rupees they bring in, they keep 42 as profit after their operating expenses. Shows they're managing costs well and staying profitable.
That's really solid, especially with costs going up everywhere. So they're growing, they're making money.
What about that balance sheet? Are they in a good spot to keep investing?
Oh, they're in a fantastic position. That debt-free balance sheet gives them a ton of flexibility for future investments.
Yeah.
In an industry like chemicals, where you need a lot of capital, that's huge.
So not just growing, but growing smart. Okay, let's talk about the brains behind the operation. The promoters, the management team, who are the key players here?
Clean science and technology is run by technocrat promoters. That means they've got serious technical chops, deep expertise in the chemical industry.
So it's not just a business, it's their passion.
Yeah, and you can see that reflected in their focus on innovation and quality.
Makes me wonder, how much control did the promoters still have? Any major changes and who owns what lately?
The promoters still have a good chunk, but no big shakeups recently. Investors seem pretty confident in their leadership, especially since they've got a really solid management team with a track record of success. I like hearing that. Not just growing the business, but doing it the right way. What about their board of directors? Any independent voices there?
They do have independent members on the board, which is always a good sign. Make sure there's transparency and accountability. They take corporate governance seriously, which is a big plus.
So we've got a financially solid company, dedicated leadership. Time to get to the less exciting stuff.
Right.
Risks. What challenges does clean science and technology face?
Well, like any company, they've got competition. Existing players, new ones coming in, all in that specialty chemical space. That puts pressure on their market share and what prices they can command.
Competition's just part of doing business, right? What about things they can't control?
Oh, those exist for sure. The prices of raw materials can be all over the place, and if those spike, it eats into their margins. And the global demand for these chemicals can fluctuate.
Yeah.
An economic downturn, changes in what consumers want.
All those can hit their bottom line.
Exactly. It's a good reminder that no business operates in a vacuum.
True enough. Anything else?
Oh, and let's not forget about regulations. The chemical industry is heavily regulated, and any changes there can mean higher compliance costs or even limits on what they can do.
It's a constant balancing act. Innovate, grow, but do it responsibly. Okay, so we've covered the industry, how they do business, their financials, even the potential risks. What's next for them? How are they tackling these challenges and keeping that growth going?
Well, they're not sitting around celebrating just yet. They've got a whole plan laid out, focused on future growth, new products, expansion, more research and development.
Not slowing down at all.
And they're pretty transparent about it all. Their management discussion and analysis goes into detail about their strategies.
Speaking of that, what insights can we get from their management discussion and analysis? I'm really interested in those plans for import substitution in India and how they see their sustainability efforts playing into their competitive advantage.
Those are great questions. The management's perspective on all that gives us a peek into their long-term vision and how they plan to get there. Let's dive into those details next.
Okay, so let's pick back up with that management discussion and analysis. Get inside their heads a bit, yeah.
Exactly. I'm especially interested in their strategy for import substitution in India. They're talking about making products that can go head-to-head with those imports, those Chinese imports mainly. Seems like a bold move, taking on those established players. What makes them so confident they can pull it off?
It's not just about offering lower prices. They're really laser-focused on quality, on innovation, that expertise they have with catalytic technologies. They're using that to develop products that meet, even exceed international standards. And they're doing it all while staying competitive on price.
So it's not just a quick win thereafter. They're building a reputation long-term. Exactly. Quality you can rely on. And this strategy. It fits perfectly with what India wants, becoming more self-reliant in key sectors. So by cutting down on imports, they're not just helping their own bottom line, they're helping boost the entire Indian economy.
Smart move for sure. Appeals to investors, to policymakers, Everyone wins. Now let's switch gears a bit and talk sustainability. It's not just a trendy word these days, is it? It's a core value for a lot of companies, including clean science and technology. How are they making sustainability part of their overall business strategy?
For them, it's not an afterthought, it's fundamental to who they are. Remember those catalytic technologies we discussed? Well, they're inherently more eco-friendly compared to how chemicals are traditionally made.
Right, all about efficiency, minimizing waste, and they've achieved zero liquid discharge at some of their facilities. That's a big deal for any chemical company.
Mm.
For those of us who aren't chemical engineers, what does that actually mean?
Basically, it means they're not releasing wastewater from those plants. They treat it, they recycle it all within their own processes. Huge impact on the environment. Plus, they're conserving valuable resources.
That's impressive. And not just good for the planet, good for business too, right? More and more, consumers and investors care about sustainability. Clean science and technology is in a great position to take advantage of that.
Absolutely. They see it as a competitive edge. Being sustainable attracts those environmentally conscious customers, and it attracts investors who are looking for companies that prioritize ESG, those environmental, social, and governance factors.
It's all aligning, the market's changing, and they're ahead of the curve. So we've got this company that's growing, they're profitable, innovative, committed to doing things the right way. Sounds almost too good to be true. Are we missing something? What are some of the challenges they might face?
Well, no company's perfect, right? They've got their share of challenges, like we talked about before, the competition out there, how raw material prices can jump around. But there are other things to think about, too.
Like what? Give us the bad news.
Well, technology is always changing. Disruption is a real threat. The chemical industry is evolving fast, and new tech could pop up that challenges how they do things. They need to stay ahead of the game, keep innovating to stay competitive.
It's a marathon, not a sprint when it comes to innovation. What about their reliance on certain markets? They're expanding globally, but are they too dependent on any one region?
That's a good question. They are diversifying, but a big chunk of their revenue still comes from India. So if there's an economic slowdown there or political instability, that could definitely impact their performance.
Geopolitical risks are always something to consider. Anything else keeping you up at night?
Well, there are always those unexpected things that can happen. Natural disasters, pandemics, new regulations. Any of those could disrupt their operations, hurt their profits. You can't predict everything, but having a solid risk management plan is key.
It sounds like they need to be flexible, adaptable to handle all that. Yeah. Okay, so we've talked about the risks, but let's get back to the positive side. What's in store for clean science and technology? What are their plans for the future?
They've laid out some pretty ambitious goals in their management discussion. More expansion, new markets they want to tap into, continuous investment in R&D.
They're not slowing down one bit, huh?
Not at all.
Can you give us some concrete examples of these expansion plans? What new markets are they looking at?
They want to build a stronger presence in the markets they're already in, like China, Europe, and the Americas, but they're also exploring new territories, Southeast Asia, Africa.
Going global. Smart.
And they're focusing on specific industries, too, like automotive and electronics, where there's high demand for the kinds of specialty chemicals they make.
Casting a wide net, taking advantage of those global growth opportunities. What about new products? What's cooking in their R&D pipeline?
They're putting serious money into R&D, developing new products that meet their customers' evolving needs. Sustainable solutions are a big focus for them. Chemicals that are biodegradable, renewable, things that contribute to that circular economy everyone's talking about.
Staying ahead of the game, anticipating what's next. Good to see they're taking that environmentally friendly approach. It's what the world needs.
Absolutely. They're not just following trends, they're setting them, positioning themselves as leaders in sustainable chemistry, and that could give them a real advantage in the long run.
Exciting times for this company. They're at the forefront of this whole dynamic industry, combining innovation, sustainability, and a clear vision. But let's not forget about the numbers. We've talked about their overall financial performance, but let's get granular. Let's really dig into their financials.
You're right. Time to put on our analyst hats and break down those financial statements, their profit and loss, balance sheet, cash flow.
Let's see what those numbers tell us about their financial health and how they're set up for future growth.
All right, time to put on those analyst hats and dig into the numbers, yeah. Clean Science and Technology's financials. Let's start with that profit and loss statement. What stood out to you?
Well, first thing that jumps out is that revenue growth. 228.1 crore for Q2 FY25.
Not bad, right?
Not bad at all. That's a 26% jump compared to last year. the kind of number that makes investors sit up and take notice. But revenue is only part of the picture. How about profitability? Were they able to keep those costs under control?
They did, and pretty well too. Their EBITDA margin came in at a solid 42.1%, which basically means for every 100 rupees in revenue, they're keeping about 42 as profit after covering those necessary operating costs. Simply put, they're making money and they're doing it efficiently.
That's a healthy margin, especially in an industry where those raw material prices can be so unpredictable. But let's not forget the bottom line, the net profit. How did that look?
Their profit before tax, PBT, that jumped up to 93.7 crore, a 35% increase year over year. That tells us their revenue growth is turning into actual profit, which is what investors want to see, right? A good return on their investment.
So profit and loss statement's looking good. Now let's check out that balance sheet. What does that tell us about their overall financial health?
Well, their balance sheet is pretty impressive, squeaky clean, you might say.
I see what you did there.
They have zero debt, which is pretty remarkable. Gives them a lot of flexibility to invest in their growth without having those interest payments hanging over them. In an industry like chemicals, that's a major advantage.
Zero debt. That's the dream for a lot of companies.
Yeah.
Makes me wonder, though, are they playing it too safe? Could they maybe use some debt strategically to speed up their expansion?
It's a good question. Being debt-free is great, but it could mean they're not taking full advantage of opportunities to grow faster. But their management has said they're open to looking at strategic acquisitions, which could involve taking on some debt. So they're not ruling it out entirely as long as it's strategic.
It's a balancing act, for sure, weighing the pros and cons. Okay, let's move on to the cash flow statement. What insights can we get from that?
Their cash flow statement shows a strong positive inflow from their operations, and they've been putting that cash to good use, reinvesting it in their subsidiary, Clean Fino Chem Limited. It indicates a commitment to expanding their main business while staying financially disciplined.
So they're not just hoarding cash, they're making it work for them.
Okay, we've gone through their financials, and it's clear they're in a really good position. But numbers don't tell the whole story. What's the big takeaway for our listeners? What makes Clean Science and Technology a company worth keeping an eye on?
Clean Science and Technology is a really interesting case study. It's about innovation, it's about sustainability, it's about smart strategic growth. They're in a dynamic industry, and they have a clear vision for what the future holds. And they're walking the walk when it comes to sustainability. It's not just a marketing ploy for them, it's baked into everything they do. Yeah, it's not just talk, it's action. Zero liquid discharge, no debt, constant investment in R&D. These are real signs that they're committed to doing things the right way.
Exactly. And their financial performance. The consistent revenue growth, those healthy margins, that strong balance sheet, all of that tells us their strategy is working. They've created this positive feedback loop where sustainability and profitability actually reinforce each other.
So for those listening who are interested in companies that are not just financially sound, but also purpose-driven, Clean Science and Technology is one to watch. They're proving that you can do well by doing good.
Absolutely agree. Their success really highlights the power of innovation, sustainability, and a real commitment to excellence. And who knows, maybe they'll inspire other companies to follow their lead, helping create a more sustainable and prosperous future for all of us.
And that's a wrap on our deep dive into Clean Science and Technology. Remember, knowledge is power, and hopefully this deep dive has given you the insights you need to make those informed decisions. Until next time, happy learning.